Hi, I'm Kunal, co-founder at Valuationary. Today we'll be understanding a really interesting topic, that is ESG investing, and we'll be doing that with three different sets of people. The number one would be people belonging to the age group 5 to 12. The next set of people would be the ones who would be belonging to the age group 18 to 25, and the last set of people would be belonging to the age group of 25 and above. Do not worry about this bit because we have a veteran investor and manager who will be sharing his insights and views regarding the same. So if you wish to know who exactly the investor is and what his views are, make sure you watch this video till the end. Though ESG investing theme is not new, but it is becoming a really hot topic now. More and more people are discussing it, especially after the pandemic, because the stocks belonging to the ESG scheme were resilient and they had showed great returns, and at the very same time were able to beat the benchmarks as well. So let's have the first set of future investors among us and let's see if we are able to explain it to them or not. As Albert Einstein rightly said, that if you're not able to explain it to a 6-year-old, you do not understand it yourself. Here we have Isha, Jainam, Ronit and Mahi, who have just entered a new class and they're looking forward to make new friends. There are two people, Mukesh and Anil, who potentially could become their friends, and based on some characteristics, these people are going to decide whom to become friends with. Mukesh is the one who treats the environment really well and at the very same time is respectful to all of them. At the very same time, he is honest and as well as fair. But on the other hand, we have Anil, who has a lot many friends because he has a lot many chocolates to offer to them as well, which predominantly in our case means that we are talking about profits. So let's ask them what would be their choice and with whom they would be interested in being friends.
Mukesh!
Why did you pick Mukesh, Isha?
Anybody can give me chocolates, but Mukesh is the one who respects the environment.
और आपका रीजन क्या था?
मुकेश हमारे साथ अच्छे से खेलते हैं।
और आपका?
वो मेरे साथ ऑनेस्ट रहता है।
The way we treat people and how we choose them is the exact same way ESG schemes work. The way how you selected people, in the very same way you need to select companies as well. Predominantly, everybody is structured in the very same way. They love people who respect the environment. They love people who are respectful to the elderlies, and at the very same time, they love people who are honest and fair. It is our upbringing which makes us driven by profits and numbers, which ideally should not be the case. So ESG scheme is all about looking out for companies which are environment friendly and at the very same time follows all the social norms and maintains a good corporate structure. At the very same time, if they follow this, if they have that quality, automatically the numbers would follow. So we should not be only looking at companies who generate profits but at the very same time are causing harm to the environment, because in the longer run they would cease to exist. And that is how we can simplify ESG investing to the maximum level possible. Now we'll be moving forward with the second set of investors who belong to the age group 18 to 24. Here we have the newbies to the investment world who have just started their investment journey. We'll see how exactly we're able to explain it to them, the ESG scheme of investing. So for that we have Ajay, who will be giving scores to companies based on multiple parameters such as fundamental factors, social governance, and at the very same time the quality of management. So the very same thing, we have selected two companies. Number one is HLU and the other one is ICT. Do not worry, I have gotten them wrong deliberately. So Ajay, I'll be asking you a few questions and you'll have to select the company which has done comparatively better in regards to the particular factor that we are talking about. So shall we start?
Yes.
So I'll be asking you a few questions based on fundamental factors as well as ESG factors. You'll have to select the winner among these two companies, that is HLU and ICT.
Okay.
Alright. The first question we have is, which company among these two has greater net profit margin?
I guess ICT.
Okay. And the second question is, which company among these two has greater operating profit margin?
Same ICT.
And the third question is, which company has greater dividend yield?
Same ICT.
By now we can see that ICT is turning out to be a clear winner,
Yeah.
where the score is 3:0. The fourth question is, which company has a diversified pool of products?
Here it's HLU.
So the winner here is HLU.
Yeah.
Which company has an older promoter group?
Same HLU.
And which company manufactures more socially acceptable products?
Socially acceptable products, HLU.
Okay. And lastly, which company's profit do not depend on the sale of cigarettes?
Same HLU.
As we can clearly see, the scorecard now stands at 4:3 in favor of HLU. Whereas initially when we started only with the fundamental factors, ICT was coming out to the clear winner, but as soon as we included the ESG factors, ICT started losing. With this, we need to understand that businesses can no longer be looked merely from the lens of profit numbers, but at the very same time what they are doing socially and ecologically. In the past 20 years, if we see, the ESG based companies have been able to outperform their counterparts. Even the investing world has adjusted to this revolution. A fresh way to look at companies is through the ESG Matrix, where E stands for environmental, S stands for social, and G stands for governance. Ideally, ESG investing is supposed to lower the risk of investors, but you would be glad to know that in the past 20 years, the ESG funds have been able to outperform their respective benchmarks.
In the age of internet, the public image plays a crucial role in deciding the success of an organization. If it pollutes the environment or does not treat its workers well, it will directly impact its sales, either due to government intervention or due to bad public mouth art. The environmental factors considered are energy usage, carbon footprint, waste management reduction, and several others. Social factors considered are community and stakeholder welfare, upholding human rights, and several others. And the governance factors considered are the quality of management and board diversity.
Now we have our bid for third set of investors, the ones who have been investing for a long time now, and we'll see how exactly ESG investing could be a part of their portfolio. For the very same, we have CA Arvind Kothari, founder of Niveshaay Investment Advisors, who will help us delve deeper into the world of investing. Thank you, sir, for joining us. We are all waiting eagerly to have your insights.
Thank you for inviting me.
Yes. First thing first, sir, how old or new is ESG investing?
So ESG investing is not new. In fact, in the world, if you look at $40.5 trillion of AUM is into ESG funds. That's almost 1/3 of the global funds now. But people don't realize this one thing, that ESG as a theme has got a fillip by a lot of global leaders like Bill Gates, Elon Musk, you name them all. In fact, Bill Gates has this very important message for humanity, that we only have 2 decades to change our habits towards ESG or environmental problems. If we don't do that, it would be quite late for us to act, and then there'll be irreversible damages to the whole planet that we cannot repair.
But the important part for the investors would be, do they really generate returns?
So in fact, this again a very big misnomer that people have, that they don't generate returns. The past 5 years, they've been outperforming all indices in the world. In fact, post the pandemic, all the ETFs that track the ESG indices, they are almost 2 or 3x higher returns than the main indices. In fact, our own green energy portfolio that Niveshaay has launched on the Smallcase platform, they generated almost 55% returns in the past 6 months, and that's almost beaten all indices in India too.
So what is the ticket size? I would really like to invest in it.
It's a very small ticket size. In fact, one can start with just 35,000 of money into it and make a SIP a monthly basis of 5-10,000 also.
On the same line, sir, I wanted to know what is the exact correlation between what a company does ecologically or socially versus the returns that it generates.
So Kunal, there is again a confusion amongst a lot of investors that ESG is just a fad and it will go away and it doesn't generate returns. But if you look at the returns that a lot of companies are generating on cash they are incrementally investing, is something which is really interesting. Example I would give you of companies who are into solar or hydropower, when they are generating electricity, it has become cheaper than coal-fired plants. Another important thing is the consumers of these energy. When they are consuming green energy and producing their end product, the end product is getting a premium in the market because they've utilized the green energy portion. In fact, global brands like Zara, when they are using a recycled yarn, they are getting a premium for their end fabric in the market. So this is a kind of impact that are there on the returns that they are actually generating on ground, and this is something which is bringing incremental investment into it. In fact, every new plant that is being set up anywhere in the world except for China is renewable energy. No one is investing in a new coal-fired plant now. 100% of the money is going to green energy. And if you look at the energy investments or the overall investments required for the world to achieve a target by 2050, if we want, our ecological balance to come, it's almost estimated to be around $10 trillion. And there's a kind of money that, the whole world has to give to these kind of companies each year if we want to stay on track of what the global leaders are talking about.
That is really insightful, and we can all expect that ESG is not a fad and is here to stay. You being yourself a long-term investor who looks 20 years down the line, how would you recommend people to have green energy somewhere in their portfolio, and at the very same time the portfolio of Niveshaay, which has generated a return of 55%? I would definitely like to know more about that.
Great, Kunal. So, when as an investor, when we also looked at this thing, initially we were also biased in our minds that this very futuristic, whether there's work or not. But when we got into hardcore data, that is when we realized that these things are making economic sense. Things don't grow when they don't make economic sense. So there are a lot of ESG funds which have started in India. Globally, they were already there, but they've started doing well in India. Also, there are a lot of mutual funds. And when we started constructing our own portfolio on Smallcase, we thought that there has to be a mix of companies which are doing something substantial, and initially the thought was that we'll not get such companies. But when we dwelled deep into it, we were surprised to know a lot of companies in India had made these investments way back in 2006, 7, 10, and they did not do well because the theme did not take off. Now the interesting thing is all these companies have done their capex, they are now deploying their resources, they are getting incremental orders. At the same time, they are not having to deploy additional capital to do that. These kind of companies generate a lot of free cash flows, and that is what the market loves, when companies start generating free cash flows. So when we designed our portfolio, we split it up into two major themes. One is that are solving something on the energy part, because that is the thing that will reduce the carbon footprint in the world. Second is the consumption part, right? The vehicular consumptions of the emissions that we are seeing has to reduce dramatically, and hence the electronic vehicle theme has to do well, right? So the mix is 65-35 that we've designed. 35 goes to companies which are doing something good in the EV space. It's not directly manufacturing two-wheelers, but either manufacturing starter motors for it, or manufacturing battery management systems, or these are companies which are also working with some ancillary lightings and other things attached to the theme. On the other part, the green energy thing, we have companies who are making solar glass, we have companies who are making, you can say, hydrogen boxes. These are essentially ancillaries who are making turbines or related ancillary products which are going into global markets. We have companies into it which are leaders in terms of providing 60-70% equipments to global leaders who are working on hydrogen or maybe solar. So that's the kind of portfolio that we've come up with.
So do we have any criteria on the basis of which we can classify a company as an ESG company versus how we cannot?
So definitely we do have this classification, and when you compare a lot of manufacturing methods, you do look at the impact that they're making on the environment, right? So there's a company which is making recycled yarn, and they are converting the PET bottles into yarn.
Okay.
And if you look at the impact that is having on the world is huge, because all these PET bottles were not, in a way, they were going to a dumping ground, and now they're finding place in the fabrics or the clothes that we are wearing, right? So such kind of companies, if you look at their reduction of carbon footprint, at the same time giving a value product to the individuals, provides also a win-win thing for the end consumer, at the same time the environment.
So we have understood exactly how ESG works, but we would also like our audience to know how exactly they can take exposure in the ESG investing and can be a part of the future.
Perfect. So the best way is if you can take the investment in your own hands, right? And you can build a portfolio of companies who are directly, complying to these norms. There are so many companies, and these are leaders, in fact, leading houses in India like Tata's and Reliance of the world are doing something on the ground of ESG. Just look at those companies, look at what they are doing, what their growth plans are, and you try to figure it out that whether you want to, own those stocks directly in your portfolio. Or you can even set up an SIP in them simply by using many platforms. Smallcase, for example, in Case Point, allows you to democratically do that without having hassles. Either look at ESG, you can ETFs which track ESG funds. So these are another cost-effective manner through which you can take an exposure to them. But generally, these ETFs are global ETFs, so that if you have a flavor of going international, you can do that. There are also mutual funds who are having a product which is ESG tagged in India that have been launched. And of course, as we had discussed, in the previous example, that our own fund on Smallcase is a green energy fund, which has in fact all the companies which we have personally invested with have that ESG compliance and are delivering great returns and are serving people who are wanting to explore opportunity in the environment.
So I think that is very much insightful for all the audience or all the viewers that are watching this video, and at the very same time I would like all of you to go and check the Niveshaay's green energy portfolio. You'd definitely be astonished by the returns it has been generating, and at the very same time I'm very sure you'd be tempted to make an SIP into it. So make sure you visit the portfolio and at the very same time have a look at the stocks in which they are investing.